This is an update with regards to a stock called PNC Infratech Ltd. The the stock has an order book of 18,000 crores. There is an upside potential as per some experts, JM Financial and Geojit Financial, that there is an upside potential of 40% in the stock. Current market capitalization is 8,000 crores, trading at 314 rupees. That was as of yesterday. Uh, Company has delivered 151% returns in the last 5 years. Leading brokerage GM Financial has lowered its target to 450 from 470 that was quoted earlier, signaling an upside potential of 43% from its current levels. Robust growth in FY25 along with a healthy balance sheet. Monetization proceeds in FY26 are expected to provide strong growth capital, positioning PNC as a key beneficiary of anticipated surge in order inflows. On the other hand, Geojit Financial Services has set a price target of 386, signaling an upside of 23% from its current level. It's cited that uh, PNC Infratech currently has a very strong order book of 18,000 crores, 3.2x of its standalone FY25 revenue. So currently, the revenue is about 5,600 odd crores or 5,500 crores, and the stock is trading at 3.2 times its, or rather, the stock has 3.2 times its current revenue as the potential orders. Post lifting of the NHI ban, PNC can bid again for NHAI and more projects. The management expects to achieve 15,000 crore new orders in FY26, which would mean that the revenue would triple the current revenue trend for FY25, uh, wherein FY24-25 revenues declined by 40% year on year delay due to delays in execution, and expects overall FY26 revenue growth of 20% with an EBITDA of 13%. So if the company is going to get orders worth 15,000 crores, which would be nearly three times its current revenue, so definitely revenue growth of just 20% expectation would be pretty poor, and we would at least expect, if not 15,000 crores, at least if the company is able to get another 10,000 crores and materialize at least 50% of it along with its normal business, we would expect the revenue to double at least. So again, would still suggest you to liaise with an expert, get an expert advice, get the input from financial advisor or stockbroker. They'll be in a better position to give you a better idea of what you can expect. PNC Infratech Ltd is one of the front-end infrastructure development, construction, and management companies. The company undertakes infrastructure projects including highway, bridges, flyovers, power transmission lines and towers, airport runways, industrial area development, and other infrastructure activities. Important disclaimer: the information provided and recommended is from the broking houses, experts, and rating agencies. This information does not reflect as personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended you consult a financial advisor or broker before making any investment decisions. So, this is the logo of the company. This is the current price. You can see 315. So in the last 5 days, companies added 4.3% value. In the last 1 month, 22%. In the last 6 months, the company has a negative return of 9%. And overall, in the last 1 year, the company is trending at a negative of 34%. Okay, so 240 crore order contract in Rajasthan. The company's got 2 days ago. Overall, Company was incorporated on 9th of August 1999 as PNC Construction Company. Company was converted into a limited company in 2001 and renamed as PNC Infratech in 2007. Then current price high of 540, stock price to earnings ratio of 10, book value 233, dividend yield of 0.19%. Sorry, return on equity of 14.6%, return on capital employed of 14.3%. No positives for the company. Poor sales growth of 3.85 in the last 5 years. Contingent liabilities of 3,600 crores. Dividend payout has been low at 1.84% of the profits over the last 3 years. Working capital days have increased from 71 to 111, which is a big jump. Long delays in order completions. You can see only 230 crore revenue increase from quarter to quarter from December to March. Net profit has reduced. You can see June the company had 575 crore profit, and in the month of March only 75 crore profit. So you can see overall year to year comparison the company has lost about 20%, 22% revenue, and net profit is also reduced by about 10% overall year to year. So reserves have grown marginally, not too much. Borrowings have increased by about 15%, which again is not a very good sign. Higher borrowings would lead to higher interest costs, and which would impact the profitability of the company. You can see liabilities overall have grown as well. Debtor days remain constant, inventory days remain constant, days payable have improved, which is a good sign. Overall cash conversion cycle has gone up and working capital days have doubled, which signifies long delays in completion of projects, holding up work in progress and unwanted inventory tied up. Promoters 56%, FIIs have reduced their stake by 3% in the last 6 months. DIIs have slightly increased their stake to 26%, and public holding has increased by 2% in the last 6 months. So 10% is still a reasonable amount of public holding, which would not create too much of impact on the share price and on the volume of shares traded on the exchanges. So any further dilution to public holding would create a negative sentiment in terms of price easily, and in terms of high volume traded on the exchanges could end up in the oversold zone as well. So something to keep a track of. Consult an expert to get the best investment option. Please continue to share your valuable feedback with regards to improving the content of the video, and also ensure that you share this information with others who stand to benefit from this information. So thank you for watching. We'll connect with another video very soon. Take care, have a lovely day and a good night.